Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Thursday, the 6th of July, 2023. All right. So here we are in reports. Today was the JOLTS day, so we've been getting, as I said, Wednesday, Thursday, Friday, we're going to get a series of different reports talking to us about employment, jobs, how strong, how weak they are, because it culminates tomorrow with the jobs report. So normally you don't even pay attention to the ADP. Today was the day for unemployment claims. So I got my attention turned there, not on ADP. The ADP number was such a large number of new jobs that traders fell out of their seats. You're looking for 200,000 plus in the jobs, maybe the low 220s, 240, who knows, in that zone. Saw different estimates. 497,000 new jobs. Now here's the shocker. This number, the ADP, has been running just slightly behind the jobs report. Are they saying we're going to get 500,000 jobs tomorrow? I don't think so, but whoa, you have to put that in the equation. You then got the unemployment number, and the unemployment claims is what I'm saying. They went up 12,000. That's in the right direction, and then they got thrown right back because the continuing claims fell by 13,000. So you go on the unemployment list, all right, and you're getting your little bit of stuff, but as fast as people are coming on, they're going off. You're going nowhere. You're spinning your wheels. Then the JOLTS, the job offerings, the ads, the labor turnover comes out. Folks, it's just still good. It fell under 10 million. It had been to 10.1 million. Now it's back to 9.8 million. So there's less, but I expect that, and so does the market. We're into July. So the seasonal outdoor jobs are going to come to an end. The construction is getting hiring. Now it's going to shift over soon to indoor service and indoor, ideally factory jobs. But we're going to know a lot tomorrow. Why would you want to risk everything on that? Now, that doesn't mean if you're a stock investor, you come out of what you own. That's not what this is about. What I'm alluring and trying to take you down the road of is if you're a trader, you don't step in front of a speeding train and think you can outmaneuver it. You're not going to be able to. So, interesting day. If we take a look behind me, what colors do you primarily see? AMC was up. Okay, that's good. They're going to get a big hit movie now. Is it next week? The Mission Impossible series. So that's going to help them. UGA was up. That's the gasoline. That was up a little bit. Lucid gave back some. GM about stable, up 4 cents. Ford was down 37 cents. And Rivian took off to the upside one more time. Now remember, we were just looking at Lucid lower than this by a substantial amount. So it has really come back very nice. Tesla has appeared to have ended a battle in China over pricing. The electric car people have gotten together and called a truce. Now, I don't know what that means. How do you grab market share other than your car? So we'll see what that all means. When you look at Amazon prior to today, well, now the market's just staying right in the square. You can almost see the square. I think you'd agree. It's just staring you in the face. The pattern is not a trend. You have a higher high and a lower low with today's action. Okay. You came down to what number? How often do you hear me say that markets try to decide what to do at the line in the sand, the 18-day average of closes? You will hear it from me over and over. Markets that go up like to come down and challenge this number. Markets that go up like to come down, challenge number to see what it's made out of. As long as Amazon's going to be in an uptrend, that's going to be its battleground, and it's right there. Do I think long-term money was getting deployed today? Yeah. There are people that just want to buy pullbacks in the market, and they'll say, if I buy it there, I'll buy it a little lower. It doesn't matter. I don't know, that happened yesterday too. I don't know what that is. We have a higher high, a lower low on the Bollinger Band. You went up to it yesterday, 2 days ago, rather. Boom. If you've come out each time there, have you been hurt? Nope. And you're buying back at those lower numbers. What about momentum? I don't like this. Momentum's turning down into this. there's room here for this to fall a bit further. I'd be ultra cautious until we get through the jobs report and get a semblance of idea of what traders are saying about interest rates. I personally think they're going to say that Fed's going up that quarter point. Rivian, over the 200-day average. So it got to it yesterday. It's a bit over it. I don't care. You're up to a point where you're overbought. You're at that number. You're stretched. You've just come from a market at the 1330 level. It has gone up 50% in value almost. Well, not quite. What would that be? About 40%? Pretty good run in the market, okay? I think there's some money coming off the table. And I know people will say, well, that's it. You're never going to be able to get there again. I didn't say take all the money. I said you can take some of the money. You got to learn to take when you take some money off the table. The gasoline is fighting, and it's been fighting all the way through here. It has been fighting since the end of June. What's its next direction going to be? It hasn't made up its mind. In the financial services, you came up, you hit the 200-day average in the Bollinger Band, and you're not embedded. Mimic me. What would Ira say? That's where the pros are taking money off the table. You'd been in an uptrend, you got there, that's where they come off. Now, are they buying back at the 18-day average? I don't think so when you're overbought. So I think you got to wait. Plus, what's the impact of higher rates? What if you get a 500,000 number tomorrow? What's that going to do on a market like that? I don't know. I'm not going to be there to find out with worries about it. We have a lower low, higher high. You can see that you're fighting the battle right through here at 105.01. In the video, you're fighting a battle at the 18-day average. I was telling traders today, just if you're long this, don't let a profit turn into a loss. That was my word to my paid subscribers in the morning. And I think it's smart. I thought the market would hold the 18-day average. That's what I told them. And it actually did. It's back to 421. It was lower in the 413. So it's still holding on. Stocks. I don't know what to do with this. I think it's just a spin inside of the tight Bollinger Bands, either side of the 18-day average with momentum pointing to the downside. Home builders, did I not say to you, why would you think you're going to keep going up in front of this jobs report? Go back, look at what we were saying. At times you just got to do what's called a little bit of logic. You get up here, you lose the embedded reading, not quite, but now we're talking yesterday. This isn't history. I think that the pros are taking something off the table. You were embedded. They're supposed to. And now if you lose the embedded reading, I think they'll get out completely, and I think they came out today. So I know you'll say, well, but Ira, that's where the support is there. It is. But when you lose the embedded reading, it's got to rebuild. And who is susceptible to crazy interest rates if that happens? I mean, mortgages are now, they just keep moving up back to the 7% area. Some of them are 7.25%. I've seen those. The energy sector, not impressed so far with what OPEC Plus has done. Those meetings are pretty well over. I think we've heard all the headline numbers. Russia's back in the fold. They're going to cut by August 500,000 barrels a day. They're not going to sell gasoline and steal market share from other people. We have heard that Iran is now a 3 million barrel a day producer, and that they're able to export about 1.6 million a day, and that their big clients are China, Syria, Venezuela. We are waiting to see what the U.S. producer is going to do. And the general game of OPEC Plus is to make the market an undersupply market for the second part of the year. I've given you the scenarios. You can read to your blue in the face. I made it for you, and I think you'll find it's a good cheat sheet. It would get you right where you want to be. When you look at gold, all you did is rallied back, and so often I say this. You go to that 18-day average, you come out of an embedded reading, you lose it, you go there, and now the market has to figure out what the next move is. Same in the silver market, not quite. It never did embed, but it fought the battle at the 100-day average in green and the 18, and it's trying to find support at the 200-day. But tomorrow's the day that's going to tell us so much. Everything's going to react to the jobs report tomorrow, positive or negative. On the copper, I think this is a cover-all short number. I have been the guy that's bearish. I think now this is where you cover. You're down to the 200-day average and the Bollinger Band, and you're oversold. Let the other guys want to carry it the rest of the way. The easy money's off the table now. Then we get to BND and we get to TLT. While they're sharply underneath the Bollinger Band, this did not close in the lower quadrant. It's, yes, a breakaway from the sideways action, but not a breakout on the way I teach one. Definitely not bullish action. When you look at UUP, this was a get out of all long day. You hit the upper Bollinger Band. You're at the 200-day average. What are you hanging in there for? To go through the report? I wish you the best with that. FXE. I'm looking for the support right here at the 200-day average. I don't know if you can see it, but it's right over this area. On the futures it is. And in here, mentally I'm back on the futures. In here, 99.89 is the number, the 100-day average. That should be the first support. If things collapse, you can look for the lower Bollinger Band at 99.23. I don't know what that report tomorrow is going to show. So do I want you to have a lot of risk into this all-important jobs report? Absolutely not. Do I want you afterwards to come in? Yeah, and that's when I record the morning subscriber video at 9 a.m. So when I'm recording it, I'm going to have the buys and sells galore. Remember, this is for new and returning members. 50 off, be it on the futures, the combo of the futures and the ETF video, the ETF by itself, the full research with the ETF. You pick the package, 50 off. You're going to find it's a bargain. You get 22 videos per month from each one of the packages. My writings come out Monday through Thursday, typically 2 a day, sometimes 3. Then on Sunday night, a package of writing, and then on Friday, 1 in the morning. So you'll see what it is. And remember, we do weekly charts mixed into the daily, and on the weekend, as a subscriber, you see all the weekly charts, and that's been fascinating. I've been putting more and more trades on off the weekly than I have on the daily recently. So I'm Ira Epstein. Go to iraepstein.com. Move your cursor up to the top. You'll see an icon appear. Give it a click. You can always call our staff. There's the number. It's right in front of you. And I'll see you first thing in the morning.